On today's Hashi, I'm discussing this morning's release of the Consumer Price Index (CPI) report for the month of December, the Fannie Mae Home Price Index, as well as mortgage applications for the week. Today is Wednesday, January 15th, 2025. I am Byron Lazine, and the Hot Sheet starts now. Welcome into today's Hot Sheet. Let me know in the live chat which market you are tuning in from here today on this midweek, middle of January, as we start to understand what this early 2025 year might be shaping up to be. We've got some more news today that I find encouraging off of yesterday's PPI report. We're going to get to that first. But before I do that, I need to share with all of you a couple things coming up in the BAM world. A week from today on Wednesday, Wednesday, I guess that would be the 22nd. Yes, 22nd next week, Wednesday, 3 p.m. Eastern, 12 o'clock Pacific time. I will be hosting a webinar completely free and open for you to sign up now. Webinar on the new way to win listings in 2025. Make sure you do not miss that. That's a week from today, January 22nd, Wednesday, 3 p.m. Only way to get that replay, of course, would be a BAMX member or sign up. So I'll have Haley put the link in below for the new way to win listings. And then on Wednesday, February the 5th, coming up in a few weeks time frame, we have BAM Pro Bowl number 2. Make sure you're signed up for this. The only way to get this would be there live for our second major BAM Pro Bowl ever. Second year we've done this. Last year we had over 4,000. Be there live or be a BAMX member. The replays will not be sent out to people just for signing up. You either got to be on the live or be a BAMX member. You can grab your free ticket right now with the link. We've got Ken Pozak talking about dominating your market with a hyper local media company strategy, what he's done on YouTube. Jared James talking about real estate scripts, and Tina Call and Kofi Narte is also going to talk about some luxury stuff. And Tina's brilliant every time she comes on any content. So myself and Eric, the broke agent, will be moderating that BAM Pro Bowl. Make sure you sign up. All right, now let's jump into the news of the day. This is good news off of yesterday's good news. So back-to-back good news that ends with PI. PPI came in under expectations yesterday, and the CPI did the same today. So Consumer Price Index, CPI, and core inflation, rather, on CPI came in under expectations. This is another good signal for the market. Okay. So US Consumer Price Index slows to 3.2%. The expectation for December was that we would hit 3.3%. Here's where we're looking at Consumer Price Index overall. Let me get to that chart. Here it is, the CNBC chart, down to 3.2%. Last November, we were at 3.3. The expectation was, November, December, that we would be flat. We moved down to 3.2. This is the core number, less energy and food. If we look at all items, we did increase 0.2% from 2.7 to 2.9. But both of these numbers ultimately are trending overall
last couple of years continuously in the right direction. We're still just getting stuck in this range above the 2% target. 2% target is the historical Fed target and the target that Jerome Powell and this current FOMC continues to stick to, and which is one of the reasons why the Fed is saying, hey, we're just don't expect any cuts anytime soon. They're projecting 2 out of 8 meetings this year. Right now, if we go over to reactions from CME Group, just based off of this CPI report here today, the next meeting's in 14 days. Nothing has changed since yesterday's good PPI report, in the sense that the Fed will likely not cut in 14 days. It's more than just likely. CME Group has it at a 97% chance that the Fed and coming out of that meeting in 14 days is going to just stay put. They're not going to do anything. That 2.9% number, the headline number there on CPI was also that met expectations. The overall there coming down from 3.3 to 3.2 beat expectations by 0.1. If we just look at shelter, because shelter's weighted heavily on CPI, particularly because of the way we weight this with owner's equivalent of rent, which is a ridiculous measurement, but one that they've been using since the 80s and the one that we're stuck with. Remember, shelter makes up 36.7% importance of this CPI. The markets react to the CPI more than maybe even the Fed does. So the market, what's the Dow doing? What's the stock market doing? What's the 10-year reaction going to be? This is why we look at this stuff, because it's all an important component of what we're going to be faced with here moving forward. And shelter makes up a huge portion, over a third. So if we look at that owner's equivalent rent, we moved up 0.3% here this month off of 0.2. If we look at October, we were at 0.4. We came down November 0.2 on owner's equivalent rent. That was a good sign. But now we've moved back up to 0.3. This is weighted 20. So this is over 0.25%. If we go adjusted, we're at the 0.3. If we look year over year, 4.8. So this is still shelter, the biggest driver of CPI inflation. Overall, shelter stayed flat in December, 0.3 versus the 0.3 in November, off the 0.4 in October. And there you go. So we're still seeing shelter be very sticky in how they're looking at CPI. Remember, CPI is not taking into account what we've looked at the last 12 months, which is that rental prices have actually decelerated. We're going to get into, existing home Fannie Mae here in a minute, showing fourth quarter might be a re-acceleration on some of that price. A little bit of a surprise to me, but overall, we've seen deceleration on how much appreciation has gone up. And we've actually seen rent prices go negative. If we go to first page here on the CPI and just take a look at what were the big movers. Gasoline index increased 4.4% over the month. Food rose 0.3%. The index for food at home that was food at home 0.3%, and away also came up 0.3%. Indexes that increase: shelter, of course, airline fares, used cars and trucks, new vehicles, motor vehicle insurance, and medical care all moved up. Personal care, communication, and alcohol were among the few major indexes that decreased over the month. So some big sales, I guess, on alcohol there going into what was the holiday season. All right. Good news there overall on CPI. So far, we're seeing that the Dow has moved up about 600 points. So if we're just looking at the Dow's reaction to this news this morning, we're up 600. S&P is up 1.26%. NASDAQ up almost 300 points, 1.5%. And we'll take a look real quick here at the 10-year. 10-year is actually moving down. So first time in a week, we've seen this range, 4.66 on the 10-year. That should get the 30-year to maybe drop back under 7.25. We've been hanging up around this 4.8 number. Remember, we hit right in here a couple of days ago. We hit the 52-week high on the 10-year, which hasn't been helpful for where we're at on the 30-year fixed. 30-year fixed ended the day yesterday right at 7.25. That was just slightly down from 7.26 the day prior. Maybe we can get this back into that under 7.2, 7.15 range that we saw, just a week ago, and start moving this thing back down in the right direction. Coming off of 2 days with, decent inflation numbers. Okay. Fannie Mae just released a report on home pricing index. Okay. So this was released yesterday, And Fannie Mae is reporting right now that the home price growth has re-accelerated in the fourth quarter. This comes as a shock a little bit because, we expected that deceleration in price appreciation. Didn't mean price wasn't growing, but the deceleration in how fast to continue through the end of the year as you get into those winter months. But reporting out of DC, Fannie Mae says single family home prices increased 5.8% from quarter four 23 to quarter four 24. It's an acceleration from the previous quarter's downwardly revised momentum of 5.4% annual growth. Okay, so as we got to the end of the year, we didn't see more sellers decide to budge on price. We actually saw the opposite. We saw price accelerate back up when we look at the whole picture now. According to Fannie Mae, we've looked at those price cuts. We look at price cuts every single Monday, and one thing that stood out to me the last month or so when we look at those price cuts is, hey, we're not really seeing a huge increase on price cuts with sellers. We saw a little bit of a increase versus the same time last 12 months ago, but not a huge increase. It told me a couple things: that the sellers that are on the market are serious about how they're marketing the property. Prices is just a component of marketing. That's all that is. It's, am I going to get enough attraction on the property to be able to negotiate a fair offer? But it told me that the sellers that were on the market are serious, but there wasn't this explosion of desperation of like, a whole bunch of sellers saying, oh my gosh, there's not as many things selling, or it's taken 3 weeks now instead of 3 days. I need to move this price down. That wasn't happening in a significant way. Here's the quote here, actually, from Senior Vice President and Chief Economist. Year-over-year home price growth accelerated in the fourth quarter, and this follows back-to-back quarters of deceleration. So Q2, Q3 were those quarters where we saw deceleration in this home price growth. Inventories of existing for sales have homes for sale have improved from a year ago, but remain historically low, largely due to this so-called lock-in effect. This line right here, when we're talking existing home sales, like, store this away, have it for everybody who's going to get things confused. Inventories going through the roof. Are you talking about new construction? Are you talking about this particular market? Like, what do you mean about inventory is going through the roof? This is where, it depends on what your customers are reading. There's things on X like this. Okay. Here we've got this account, this Darth Powell account, talks about housing on X all the time. You can connect with me on X at Byron Lazine. I'll get into it with these guys from time to time, but he talks about housing all the time. Has over 50,000, X followers. There's actually prominent housing people that are following this account. And, this is where people that are just not everyday real estate professionals can start to get their data confused. And, it takes a professional to break it down for them. Okay. So this account says new single family homes for sale in the U.S. hit the highest levels in 50 years. Okay. Number one, that's not true. We went over this yesterday. Just look at the chart you posted. Like, open your eyes and look at the chart you posted. The 3 years before the great financial crisis, new single family housing starts were much higher than where we're at right now. Okay, we just looked at this. So we're not the highest level in 50 years. We're certainly the highest level at any time since that recovery. And like, should we be building more homes today than we built in 1970 when we had far less people living in this country, or 1980? Yeah, I think probably if we're looking at, early 80s versus today, we're talking about 40 years of more people. Yeah, we probably should be building more homes. And look at how low we got, and we're in that recovery mode. Anyways, this number here is for new homes. If I'm an everyday consumer and I just see this new single family homes, I could tell you, I don't think most people would even know that this is talking about new construction. That word single family homes for sale is what's going to resonate with an everyday consumer. and they're going to say, whoa, there's more homes on the market now than at any point in the last 50 years, when we know that it is quite the opposite. And when you look at existing homes, which is what most consumers own, is an existing home. When we look at existing homes, we know that we're at a historical low. If we go to the hot sheet show notes, where we just broke down what you need on this stuff, so you can use a copy and paste. Use code HOT to get BAMX today. We've got that data right in front of us. We've got that quote that's pulled out that I just went over. This quote about this historically low level, low inventory. Inventory levels remain historically low despite slight improvement over the past year. This is all still due to the lock-in effect. If you think the lock-in effect is going to ease up right now with where rates are, it's probably not going to be the case. Rates, have definitely, they're over the 7% now. This is, this is released yesterday, but they put these reports together probably a couple weeks ago, and so they're not even taking into account the last week's momentum on rates. A potential decline in mortgage rates could alleviate the lock-in effect. We feel like we are a long ways away from that, where we sit today. And we're definitely not trending in the right direction. Hopefully some of these, these inflation reports that we've got right now can start to be helpful in moving some of those numbers in the right direction. All right, so there's Fannie Mae. Let's take a look now at mortgage application. I do think we need to give this another week. That was my prediction coming in, to really see how much these rates are impacting mortgage, or start to see how much these rates are impacting mortgage application. These numbers here this week are still going to be totally skewed from the holidays, because the holidays leaked in to the beginning of January. And look at this, mortgage applications 33% up from 1 week earlier. That's because this is the week ending January 10th, and that's you got the New Year's that you need to adjust for there. Okay, seasonally adjusted purchase index increased 27% from a week earlier, so at least buyers came back after the holiday. That's what that 27% tells me there. But the big number, 2% lower than the same week a year ago, is a little discouraging, probably mostly because rates are back up over 7%. It'll be more discouraging if we start to see end of January multiple weeks of comparing the same week to last year, and we're down versus last year when things were, we're talking about low levels since 95 on mortgage demand, mortgage application. We want to see these numbers start to get up over. Not worried about this week. We're just in the beginning of January. But as we get into those last couple weeks, and we do a rear view mirror look on the last couple weeks of January, when we do a rear view mirror on what happens the first couple weeks in February, I want to see those numbers year over year increase on mortgage demand, on mortgage application, not move down off of what are also historical, near historical lows. So we need to get past these couple of weeks here to really get a better picture before we get discouraged by what's going on, and before we really understand how much pressure on this market is 7.25. Right now we've got a lot of that new year, that tailwind, that momentum, that confidence. But does that confidence start to wane? Does it start to wear people down, buyers in particular, again, if we don't get those rates back into the sixes? So that remains to be seen. And we will obviously just keep working hard on being prepared to meet today's market right here on the Hot Sheet. It's the only live show on the internet that does a 24-hour look back on housing each day that the markets are open, Monday through Thursday. Join us at the BAM Pro Bowl number 2, February 5th. Link is down below. Also next week, free webinar, the new way to win listings in 2025. I'll be hosting that. I'll also have a member of Zillow's company along with me, and then a surprise guest. So that's going to be bonkers as well. Make sure if you want to get replays to all of that stuff instantly, you're a BAMX member, and all of the Hot Sheet show notes and everything that we do here on this show. Obviously, each access to that each and every single day. Use code HOT to get into BAMX, and BAMX members also get membership to Zudilio's platform to generate more listings and compete with any iBuyer in your market. There you go. That's your Hot Sheet here for the day. Hope everybody has a great Wednesday. I'll see you back here tomorrow. Until then, toodaloo.